This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Okay, we're finally on Friday, the fifth and the last trading session of the week. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Morning.
Hi, morning. It's the end of the week, but it's the start of a brand new day, and it's going to be a pretty long day because we have Reliance coming out with numbers in the evening as well. Yeah. So lots of cues to reckon with today.
Yeah, indeed. I mean, and no blue tick, guys.
The blue ticks are good.
Blue tick's gone from Twitter. I mean, this morning we woke up, so let's see how this one...
I don't think that changes our life.
I don't think it changes, but it was weird to just look at yourself without that blue tick, right? I mean, but it's fine. I think it's gone for everyone. But the other point, you know, my neighbor's daughter rang the doorbell yesterday and said, you could tell your co-anchors that some of our schools are shut and we have the long weekend because it's Eid today.
Eid, yeah.
I think even your son's in the same school.
Yes.
So, you know, so some of them are still celebrating those long weekend. Unfortunately for us, the markets are open.
So for all those who are celebrating Eid, Eid Mubarak to everyone. I think it's tomorrow. So
and some people
celebrating in advance, but festivities across the board. And if not us, at least our children get to enjoy it.
Absolutely.
All right. Well, you know, we are open, but we're not doing very much, right? I mean, that's the point. For the last 2 days, the market's kind of gone to sleep. Absolutely. And the range has been contracting. The intraday range, I think, yesterday was 100 points. The day before yesterday was about 90 points. And of course, I mean, you know, the prior 3 or 4 days, it has been much wider. So very, very tightly ranged markets now for the last 2 sessions straight. Let me just begin with what the sort of picture looked like overnight. The Nasdaq ended a little lower. So, I mean, you know, by the dip, sentiment kind of ran out of steam, I guess, although the earlier dip was bought and then eventually into close, the market sold off, US that is. The S&P was a little better. Earnings which came through, there were more disappointments as compared to surprises on the upside. And data, economic data was weak as well. I mean, if you want to look at the data, the Philadelphia Fed business outlook was much weaker. And actually, that was the main problem. Jobless claims rose, existing home sales looked quite weak as well. So all of it kind of is flashing recessionary kind of signals, and that's what the market paid attention to. So along with stocks, bonds rose, so yields actually were lower. Dollar index also lost about 0.18%. We are at about 101.79. Many have been calling for the imminent demise of the dollar index, the dollar itself, but it's kind of holding 101, sort of around those levels for the last many. There are no big U.S. earnings later tonight. I mean, 1 or 2, but nothing big. The big bazooka of earnings in the U.S. comes next week. So you'll have numbers from Microsoft, Meta, Amazon, Google, and I think, you know, commentary from those will be very important. We keep hearing Fed commentary. The Fed meeting is, by the way, 2 weeks from now. And we are entering a blackout period, which means that, you know, we will not have Fed speakers indicating which way they're going to go, one way or the other. But to be clear, the market is pricing a full 25 basis point hike from the Fed. So the market keeps vacillating between no hike, rate cuts, to fully pricing rate hikes, at least for the May meeting once again. Let's come to the market here. I mean, not, as I said, not very much, very, very quiet. So I'm going to repeat what I've said the last 2 days, pretty much. So we are still in that range, right, which we made on Monday, the beginning of the week. The Nifty once again managed to defend the 17,574 level. A break of this level basically will get you that 17,501 level back into focus. But we're not there yet. For 2 days now, there were tests, but that level has been held on to. On the upside, the range on the upside from Monday's range, the Monday's bar was 17,863. And unless and until that is taken out, that's not very far away, by the way, on a closing basis, I mean, I think further upsides perhaps become a little elusive. Consolidation will be the name of the game. So this is a range. It's not a very large range, but you need to break a clear break and a close either above or lower. On the Bank Nifty, a close below 42,000 will confirm further downsides. And the recent swing high on the Bank Nifty was 42,603. That'll be the important one to watch out for on the way higher. So that's basically a quick sort of a trade setup in terms of how you should approach things. We are in that range, and watch out for these two levels on the upside and downside. SGX this morning is once again indicating an absolutely flat start. Sonia.
Well, absolutely flat start this morning, but I guess, a lot of big triggers, right, over the next couple of days.
Yeah.
So there's Reliance today and there's ICICI Bank tomorrow. And Reliance, I think, has about 11% weightage on the index. ICICI Bank has 8 to 9% weightage on the index. So put together, almost 20% of the Nifty constituents will be reporting their numbers in the next 2 days. And in that context, it becomes very important to track those cues. For today, I mean, the market has been largely range-bound over the last many days. So 17,600 to 17,800 has been a bit of a, range for the market in the near term. FIs sold yet again yesterday. So that is a bit of a concerning factor. And it was a large figure. Almost 1,200 crores went from the cash markets. Even in the US markets, they were under pressure. The Asian markets are under pressure as well. So it looks like we're going to start on the back foot. It's a bit of a muted start that the SGX Nifty is indicating. Now, in the US markets, Tesla was down 10%. So everyone's giving a lot of importance to earnings. And any underperformers are being, thrashed quite a bit in terms of the stock performance. So Tesla lost about 10% after the disappointment in earnings. In that context, for our own markets, HCL Tech numbers were not too bad. They were largely in line with estimates. There were no negative surprises. And after Mastech's numbers, HCL not too bad. Perhaps the street won't be as bearish on IT stocks. That at least is the narrative. For Reliance, it comes out later in the evening at around 7 p.m. You can expect decent performance across most segments, but in Reliance Jio, there will be a little bit of a slowdown because of the absence of tariff hikes, and that's something that has dragged down the growth. But stripped of that, the oil to chemicals business will look fine. And then you have ICICI Bank's numbers tomorrow, where it's expected to be quite a strong set this time around. So all in all, impending cues, but in the interim, the market continues to be quite range-bound.
Well, that's right. Sonia, and yesterday was weekly expiry that played out, but it didn't really feel like that because the 3 p.m. move didn't come about. We went around 17,630 numerous times yesterday, and we saw a U-turn from there. So the markets are in a bit of a consolidation mode. As you said, those big numbers in the next couple of days, whether it's Reliance Industries or ICICI Bank, both of them will give some direction to the index. Now, the IT stocks will be in focus today. As Sonia mentioned, you have HCL Tech as well as Cyan. The numbers look pretty good. IT will bounce, but it's unlikely to lead the markets high. We need to go to fresh all-time highs, and the IT index cannot do that because the larger weights, well, they cannot outperform given the kind of guidance, given the kind of numbers that they have delivered. ICICI Bank, that's the one that holds the key trigger from here on because that has the ability to fire up the Nifty as well as the Nifty Bank given its weightage. So that's going to be the key trigger for Monday's trading session. What do the FIs do in the F&O market? In the cash market, yes, they sold a little bit. But in the F&O market, they added some long positions, close to around 3,000 contracts, and they covered some shorts out there, which takes their long positioning to around that 38% odd. It's been in that vicinity of around 35 to around 38%. The options data actually is quite interesting because we're focusing on the 17,700 odd level, both the call as well as the put. Now, the call writers, they believe that they can defend the higher levels, but that's why the open interest is more than a crore shares out there. The 17,700 put as well has been seeing some writing, but the confidence out there is a little bit lower. But it appears there's a short straddle at play. What is that? You write the call as well as the put of the same strike. So you just put that together, you pocket the premium of 70 plus around 115. The total premium you take is around 200 rupees. And then you add 200 to around 17,700. And from 17,700, you deduct 200 as well. So the broad range that this strategy is playing for is around 17,500 on the downside and 17,900 on the upside. That's the broad range for those, that are playing the short straddle. But the range for the day will be, if you get the market closer around 17,550, 17,570, then risk reward could favor you. However, the big trigger on the upside will come only once we get past that 17,700 odd mark. Yesterday, it appeared we were going to be challenged that mark, but then we did a U-turn from there. So I think a fresh breakout only once we get past that 17,700. Then we look at the 100 DMA, which is closer to around the 17,900 odd. Friday, let's see how this one goes.
Okay. By the way, any of you ready to pay for the blue tick?
No.
If you have
No.
to? Okay, that says it all. Neither am I, though. But I wonder what Twitter's thinking, right, when they believe that people will eventually end up paying for the blue
it's
tick.
fascinating, Sonia, because it's like a big social experiment, right?
Yeah.
Live in front of us. It's perhaps it's going to be so whether people eventually give in, say, well, the only thing is that maybe they that's the only pull if there was one for paying is that you're able to. I mean, the space available to you is much more, and that actually is a real enabler, right? I mean, you can post things which you want without trying to...
I think you'll be forced to pay if your followers start to go down, right? And if you start to see there are a lot of people impersonating...
That's the risk.
That's the risk.
Celebrities, known people as well. So that's when you perhaps start to pay. But in the interim, let's wait and watch. The entertainment continues for sure.
By the way, Musk is paying for 3 people, right? We can request on TV for him to pay 3 more. I mean, I think he can afford it.
I'm sure he can afford lots more than that. But before we start, let me tell you what's lined up in the first half hour of the show. We'll get you updates from the markets and a lot of news across the globe. Abhilash Narayan of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At around 8:30 a.m., we'll do a fundamental stock analysis with GV Giri of IIFL Institutional Equities. But first up on the equities front, we have Matt King of Citi, who says that consensus holds that strong year-to-date risk performance stems from the genuine improvement in the economic outlook. But a better explanation is the injection of over $1 trillion in central bank liquidity. This held down real yields, propped up equity multiples and tightened credit spreads in the face of falling earnings expectations. He adds high-frequency liquidity indicators suggest that it's already stalling and coming weeks seem increasingly likely to bring a sharp reversal. With peak liquidity past, it would not be at all surprising if markets were now to experience a sudden pressure loss. What does pressure loss mean?
I mean, loss of pressure. I mean, you're flying. it's aviation parlance. So, that sounds scary, right?
As long as it's not a crash landing, I'm fine.
All right, well, let's the equity call. Let's get to the money market, the rupee call as well. This is Lakshmanan V of Federal Bank, who says US dollar will continue to be range-bound till the FOMC meet in the first week of May. The tough on inflation talk by the Fed officials is being countered by many data indicators suggesting softening of economic activities. Higher inflation in the Eurozone economies and UK adds pressure on the dollar index. Lakshmanan expects the dollar INR pair to trade in the 81.8 to 82.5 to a dollar range for the next few trading sessions and expects some selling in the US dollar in early session today.
And on the bonds, Lakshmanan of Federal Bank once again gives us his view on the bonds, says they are range-bound with the 10-year benchmark in the 7.18 to 7.25% territory. MPC minutes reflect concerns on inflation owing to factors like monsoon, geopolitics, which limits the upside on bonds. Despite the easing of inflation, he adds that any rally taking the yields to below 7.2% is likely to see some selling interest.
Well, we have a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit from now in our special Top 10 segment. But for the time being, let's run you through the list. HCL Tech, ICICI Prudential, Cyient, HDFC Life, SBI Life, Max Financial, Oberoi Realty, Siemens. You have Rail Vikas Nigam. They're all the stocks on the back of positive news flow, while LIC could be the one that's reacting to negative news flow.